Taking a closer look at swings there, the charts showing yesterday's trade range with 2 temporary halts triggered in that debut session, another to kick in if the gain extends to 30%. Staying in the cryptocurrency space, shares of an ASX-listed blockchain software company, DigitalX, hitting an all-time high this session, up as much as 30%. This after it announced that it was returning to the cryptocurrency marketplace as a market maker on approved cryptocurrency exchanges. The Perth-based company has more than $18 million in liquid assets, including more than 10 million Bitcoin. And that is part of its remarkable run this year. Return was possible. Now, there we can see a tempering on the rally just mentioned, up 9.75%. Okay, well, let's get to grips with all of this. Leight Travers, CEO of DigitalX, out of our Perth studios. A warm welcome to you. Your own share price rally is kind of emblematic, is it not, of this notion of the volatility that we've seen marking the introduction on futures trade itself. We're looking for some reduction in this by bringing in the bulls, bringing in the bears, and, you know, to date this is not really transpiring. Can you explain it?
I'm not surprised to see the early volatility, particularly in the futures prices. We've just opened up this asset class to finance managers that have been sitting on the sidelines for the last 4 or 5 years, watching the gains, and now's their first opportunity to take a position. So it's really not surprising to me. And from a DigitalX perspective, we received funding from a cornerstone investor early this year, but the team has been around in Bitcoin and blockchain since very early on in the piece. So our gains are not surprising to myself either.
When do you suspect people go in and fight the trend? I mean, how long would you give it? Because we're in the enthusiasm phase now, so obviously the longs are outpacing the shorts. But there will come a point, you'd acknowledge, where that could quite well reverse.
Oh, definitely. I mean, there's talk, you know, is it a bubble? But I think, you know, all situations that I've seen where we've seen a big correction in the marketplace, you know, that's been led by buyer exhaustion. So there's no buyers around. It's quite the contrary. We've got an entire new marketplace that's opened up. That's some of the largest institutions globally can now take a positive position on Bitcoin. And you've also got exchanges all around the world. They cannot keep up with the demand from new clients that are joining. There's the Australian exchanges, for example, you know, had a report out a couple of weeks ago, or maybe a couple of months ago, to say that they're receiving 300 to 400 new clients a day. That number's in the thousands now. In the US, there's 100,000 new people looking to buy Bitcoin. So certainly far away from that, I think.
And when you do see, for instance, the example of Interactive Brokers Group giving clients access to the Bitcoin futures from the CBOE's offering, but only if they were going long. I mean, it's impossible at the moment to put any other trade on.
I mean, it's obviously one broker, Interactive Brokers. They've got a 50% margin rate as well, so they're taking a cautious approach to getting involved. And, you know, obviously you're going short. You know, what's your downside? You can
be ruined.
You can, exactly. And, you know, we're seeing some market commentators out there calling, you know, $400,000 prices, which is obviously equivalent to the gold price in market cap. You know, there's some ex-founders of PayPal that are calling $1 million coin price. So it's a risky trade to take a short position in Bitcoin, I think.
The absence, though, of large clearing firms, you know, the likes of your JPMs, your Bank of America, Merrill Lynch's, when are you hearing a signal that they will get off the sideline and engage?
In terms of being a clearinghouse, that's not something I'm completely familiar with when they'll be getting involved, but obviously with NASDAQ coming on board pretty soon, I wouldn't be surprised to see them far away from it at all.
Now, again, the retail component looks to be very much the driving force right here and now. Do we get a sense as to whether that's going to run and be the overriding influence for how much longer? What are you hearing there?
I think that's probably the most exciting thing. It's a market that's been led by retail rather than retail coming in at the top and, you know, being filled in by institutions. It's really a reallocation of capital from, you know, some of the more wealthy institutions that have been established, you know, for decades or hundreds of years to more retail investors that have been happy to take an early bet and a bet away from the US dollar and more traditional asset classes. So I obviously see that, you know, now the market has opened up for traditional financial institutions to get involved, so that could easily change pretty quickly, and you'd have Wall Street making an undue influence on the Bitcoin price. So that's something to be seen.
What of those who want to actually cash out? So you get to a position, let's just say you've got in 3 months ago, and now you're saying, it's time to liquidate. What's the practical means of doing that?
Obviously, on traditional exchanges, you can go onto an exchange, register your details, and sell an exchange into Australian dollars. It's quite simple. There's a number of Australia's exchanges now that you can do that. There's AusTrack that's now regulating those exchanges, and that's passed through both houses of Parliament, and that'll be established into law by April 1st next year. So that's sort of legitimising Australian digital currency exchanges, and I'd expect them obviously to have more stable commercial relationships with banks and also give consumers comfort about interacting with these businesses.
Talk to me therefore about what type of a setback the theft of Bitcoins via the Bitcoin wallet experience of late has basically signalled to you. I mean, well, what lessons to take from this?
I mean, obviously that's what futures marketplace is opening up. There are some education challenges around getting involved in the underlying asset, which is Bitcoin, and keeping control of your own private keys. Because let me be clear, the blockchain has never been hacked. It's just that people have revealed their passwords or private keys and they've been taken. So if you are worried about that aspect, then I think the safer way to do things would be to use the futures contract, and you wouldn't have to have those sort of issues. But if you put the time in, certainly there's no safer way than to secure your own assets with Bitcoin and obviously the cryptography behind that.
Yeah, because that's the thing. In this instance, this was an entity known as NiceHash, marketplace on cloud-based mining of cryptocurrencies, hackers breaching the systems and stealing an unknown amount of Bitcoin from their virtual wallet. It's hard to know. You would say what? That if you regularly change your own keys, that in itself gives you certainty of a firewall against that happening, or how to extrapolate?
You certainly don't need to change your own keys as long as you don't interact with the internet. You can have one wallet that you use quite frequently. Imagine that's your wallet in your pocket, and then you have a vault or a cold storage solution which doesn't interact with the internet, which you can use. And there's some further technical solutions you can have on top, HD wallets and things like that use a different address for every time you send. So if you do things properly, you shouldn't be hacked at all.
What are the greatest challenges now for the whole rollout of this, in your view? If we just talk more broadly about even the actual blockchain. We've heard in the last week the ASX make a move into uncharted territory by replacing the chess system with a blockchain model, which of course Bitcoin runs off. Are you seeing that there are lessons to learn even from these early trades in Bitcoin that can be applied to the ASX's move?
I think that's the most exciting part. Obviously, the thing that grabs the headlines is the price of Bitcoin and cryptocurrencies, but the real technology innovation is the blockchain that underpins that. And ASX is taking advantage of that. There's a number of other businesses out there. Even in the banking world, there's over 200 banks that have partnered together to form a consortium to set up their own blockchain or distributed ledger technology that'll be more secure than what they're using with the current SWIFT protocol. So it's a fantastic piece of innovation, this technology, and I think if we can focus on the positives that it's bringing, then I think the adoption in Australia can continue to lead the way. And
whenever you hear the words secure private network, does something in the back of your mind ring something in any shape or form? The louder they claim it's secure and private, arguably the more of a challenge there is to undermine it. How would you respond to that?
I mean, when people are talking about things loudly and not giving you clear evidence, obviously I'm always one to sort of ask questions and look at the finer detail. But I do think from a blockchain perspective, there may be a situation in the future when instead of asking for cloud secured infrastructure for your new projects, you'll be asking for blockchain secured infrastructure. So it's certainly a new movement and one that is getting a lot of airplay.
Okay. Listen, we thank you for your involvement in this discussion. Wish you well for the future.
Thanks, Carson. Appreciate it.
Okay, there Leight Travers, their CEO of DigitalX, out of our Perth studio. Let's